Good morning. Welcome to Forex In Four. Today is Friday, October 21st, 2011. All right, here we are again with the euro. We're on the 30-minute chart, and we're taking a look at what's going on. We know that tomorrow starts the debt summit that they're going to do in Europe, but already they've come out and said, well, we're not actually going to have a resolution here by the end of this debt summit. It's going to be closer to next Wednesday. So they're still wrangling around about the time. I think it was a bad idea to put a time on this, but you got to remember too that that this time was sort of imposed by G20 leaders, and initially Merkel and Sarkozy, or Merkozy as they've affectionately been come to known, is that they said early November. So they're on their own time limit, which the market's willing to give them a couple extra days. And you can see here, all right, yesterday we had this move lower, and then boom, we had this big move higher that came out. Now the reason that thing moved higher is that we're starting to hear the rumors of, all right, this is what's being agreed to, all right, this is what they're doing, this is what they're talking about, we like these things, that sort of deal. And essentially the move lower initially was on this thought that all right, we're getting closer to the debt ceiling, we want to just sort of be risk averse, all right, and then all of a sudden the news gets floated that they're now considering upping the number to 1.3 trillion that they're going to commit to this. So that's a huge number that the market is happy with and looking for. And yesterday afternoon there was a huge spike there. Markets pretty much just turned around, which was a good thing. All right, and then we get later in the day, all right, then we hear, well, now we're going to kick this down to Wednesday. All right, and you can see that it just gave back all of its gains. So we're trading in this range, and it's a fairly big range, but 136.50, I would say, to 139 is about the range. And when you look at where Euro USD is right now, just at 138, we're sort of smack dab in the middle. Sometimes it's hard to get an idea of whether you want to be long or short this puppy going into the weekend. But I would say that the risk probably outweighs the reward. All right, given what could potentially happen at this debt summit. While we're not expecting the answer, all right, who knows what's going to happen? Somebody goes storming out of the meeting or something like that, and it's all bets are off. So, I think the risk is just a little too much to step in and take a position at this level. However, if you get it back in this 36.50 range, perhaps that might look a little bit better. So, some other things being floated out, combining the EFSF and the ESM. These are two different stability mechanisms for the ECB to purchase this bad debt from all these periphery countries. All right, there's the idea of creating a bad bank. There's a lot of things going on, but I think they're getting close to some sort of agreement. And while I would be surprised if they actually put it out on Wednesday at the time that they've set out, all right, they shouldn't be that far away at this point. I mean, the longer they continue to drag this thing on, they realize the more they're hurting themselves. And had they taken care of this situation months ago, all right, probably could have gotten away with a lot less. So that's what we're looking at here with the euro. We just got this range going. Just want to show you here at pound. All right, pound was trading in a little bit of a range here, and you can see that I matched up some Fibonacci numbers as well as pivot points. You can see, boom, we were just trading amongst the pivot point and the Fibonacci until we got the breakout, and then boom, you get a big breakout when that thing happens. So pound is up higher. All right, they had some decent economic data that came out this morning. It was public sector finances came in a little bit better than expected. Net borrowing came in a little bit lower than expected, so that's a good thing. Although last night consumer confidence was down, 45 versus 49 reading, and you can see that that was part of the reason for this little pullback right here. All right, so things are starting to look okay. Just go over to the euro again. German IFO, business climate, current assessment, and expectations figures came in. They all came in better than expected, so that's a good thing. All right, people are expecting, listen, if they can get this thing hammered out and figured out, all right, then it's going to be game on again for the markets. The markets are very much in risk-taking mode. Okay, they want to get this global recovery moving forward. They want to see economies and stocks and things move higher. But this euro debt deal has really been weighing on them. So I think as soon as this thing can get solved, if it can get solved, then I think we see markets go much higher into the end of the year. So that's kind of what we're looking at. Not a bunch of news, no news actually here in the U.S. today. I think we've got some Fed speaker, but I just want to show you dollar CAD here. Okay, they had CPI data that came in north of the border in Canada. All right, and it came in a little bit hotter than expected. 2.2% versus 2% year-over-year core inflation. The headline figure was 3.2% versus 3.1%. All right, and that's pushing dollar lower here versus CAD. All right, loonie strengthening. Okay, we're at that 101 area, just north of parity. All right, expectations are when you have higher CPI is that the central bank's going to do something to slow it down, perhaps raise rates. But I don't think anybody's in a rate-raising mood right now based on the numbers we've been seeing, although inflation globally is higher. Okay, but I think everybody's afraid to move on rates right now because we've got this euro debt deal happening. If something bad happens there and we get some sort of collapse, that's going to crush the whole global economy. So people are willing to put up with a little bit of inflation for now, all right, until we can get a little bit more clarity in markets. So you can see we've got risk taking going on today. Just show you Aussie. Okay, boom, Aussie moving higher there. We can look at Kiwi. Kiwi looks the same as well. All right, and this is started out the day. So we've got global stocks higher. We've got the risk currencies higher. Euro's higher. Dollar's lower. Let's take a look at dollar yen here just to get an idea of what the yen's doing. That's dollar Swissy. Not a whole heck happening there, although dollar is weakening versus Swiss franc. That's interesting. Dollar yen. All right, you can see we've been trading in this range, 77 to 76.50. God, the range has even tightened up a little bit more. It looks like 76.60 area. So not a whole heck going on with dollar yen there, and that's really just because they're both those safe haven currencies. So it's going to be interesting to see if we can continue on this mode going into the weekend. If people are going to say, hey, you know what, I don't think the risk is that big of a deal, and let's keep pushing markets higher, or if at the end of the day we get some selling, or perhaps even before the Euro session, people say, well, you know what, this isn't a done deal yet. And while Germany and France have been coming up with these plans, right, everybody else still needs to be on board. And Greece actually passed their austerity vote the other day, despite the protests you see in the streets. But there's a lot of periphery issues floating around here, and everybody's got to agree to these deals. And I think everybody's pretty much on board. Right? They want to save the euro, but if Merkozy can't get it together, then we could see a little bit more of risk aversion in the market, and perhaps problems going forward. So I guess next Wednesday is going to be the day that they've set forth, and don't forget, that market's trading right now on expectations. All right, so we're expecting next Wednesday to hear this huge plan that's going to make everybody happy. So there could be room for a lot of disappointment in there. All right, people are talking 1.3 trillion. If they come out with anything less at this point, it could be a disaster. I mean, not a structural euro's going to collapse disaster, but just all right, this is not good. Boom, we see some risk aversion. So that's really what we got going on. I don't expect a ton to happen today. Maybe we get another reversal. I mean, these ranges have been pretty big, and I got to say I've been missing a couple of these moves because I'm just the way that the news has been coming out. It's not any specific data that we're looking for, but it's literally like leaks hitting newspapers and announcements off the cuff, and boom, that really just turns the market around. So if you're not on your toes, you could get burned on it. So keep trading in the short term. All right, if you're going into the weekend, you may want to be risk averse, but hopefully by next week we've got some more clarity. So that's what I've got for today, folks. Have a good weekend and good trading to all.